Hi guys, welcome back to my YouTube channel and a part of option buying series. Today I am posting the second video. First video already I posted couple of weeks back, and if you have not seen the first video then go to my video section and see this video. This is the first video of option buying series where I discussed one powerful option buying strategies, and in this second video I am going to discuss 4 important mistakes what normally option buyers do. That means this video is not about the any strategies, but this video I am going to discuss how option buyers take the trade at the wrong time. Then what is the solution for it? I'll show you the 4 setups where they take the wrong entry and they lose the money most of the time. Instead of that, where you should take the trade so that momentum on your side and risk reward also in your side. And that is what I'm going to discuss in this video. Now let's go to my laptop and let us see the presentation and let us discuss all those 4 mistakes one by one. First option buying mistakes that is normally option buyer do, that is buying or selling based on pin bar candlestick near the support or resistance. Because most of the time they must have read in technical analysis books and other videos that when you see a bullish pin bar, that means it's a bullish sign. When you see a bearish pin bar, mean it is a bearish sign. That means suppose this is the resistance line and this is the support line. When you see this kind of bearish pin bar near the resistance, or if you see bullish pin bar near the support, most of the option buyers do the mistake of going long here or going short here, thinking that it is a bearish sign and this is a bullish sign because it's a pin bar. These are the bullish pin bars, these are the bearish pin bars. So that is why I say that if you see this kind of pin bars near the support or resistance, never take any trading decision just based on pin bar. So many people they do the mistake of taking a long or short based on pin bar. So instead of that, what is the solution for it? And the solution is always wait for the full body candle after series of pin bars. That means when you see this kind of pin bar, never go short just because these are the pin bars. Wait for the full body candles. Near the bullish sign also, if you see this kind of pin bar, never go long just because it's a pin bar, now it is going to go up. Wait for the full body candle, then only you should go long. Why I am saying is that you should wait for a full body candle and then only you should go long, because sometimes what can happen that it could be trap. That means it may make a bearish pin bar, people start taking a short position, and there is a chances that instead of making a bearish candle, it can make a bullish candle. Same if you see this kind of setup where it is making a series of bullish pin bar, but there is a chances that sometimes what happens that it could be trap. That means instead of going up, it can suddenly break everything and it can start going down. So that is why always wait for the full body candle after series of pin bar, especially near the support and resistance. Now let us look at the couple of charts so that this concept is clear. Now for example, look at this chart. This chart is of 9th January of Bank Nifty chart, and look at the price action here, right? Look at the price action here. Just pause the video for a few seconds and tell me from this candle what you think. Price is going to go up like this or price going to go down like this, because it is making a series of pin bar here. So now you can pause the video for a few seconds and take a guess whether it will go up or it will go down. And you must have guessed it. It is going to go up because it is making a pin bars here. It is taking the previous support here, right? Now let us replay the candlestick and let us see actually what happened on that day. So you can see that what happened on that day. Even though there were a series of pin bar from long time, but after that one full body candle came and started going down, right? It did not go up because there were series of pin bar. So that means next time when you see this kind of series of pin bar, wait for proper full body candle, which is the sign of market going up or going down. Okay, don't take any decision based on just pin bar. Look for a big full body candle, then only take the decision. This is the another example of 18th March in Bank Nifty. You can see that it made a big fall here, Bank Nifty. After that, and it was making a series of pin bar, right? Now pause a video for few seconds and take a guess. So now take a guess what would have happened here, because there are pin bars. And let us replay the candlestick, and you can see that from there market actually started going up, right? Earlier what happened in the earlier example, you've seen that after the pin bar market started collapsing on the downside, but here you can see that market suddenly started going up. So that means what? That means don't take any trading decision based on pin bar. Wait for a full body candle. That is the sign of buyers are gaining strength, and from there chances of higher that market starts going up most of the time. And now let us discuss the mistake 2. Buying or selling big candles. That means buying or selling extra large candles. What I mean by that? That means sometimes you may see this kind of price action. That means price starts going up, making a bullish candle one after another, and it makes one huge bullish candle like this. It can be on the downside also. That means sometimes you see that it makes a bearish candle, and again bearish candle, again bearish candle, and then a huge bearish candle. And what is the most of the option buyers do the mistake? That means buying the put option here thinking that it is a bearish sign, or many of option buyers do the mistake of buying a call option here, which is a big mistake. That means what I am saying here in the mistake 2 is never buy this kind of huge bullish candle, or never sell huge bearish candle. Instead of that, what you should look for, what is the solution? Solution is always check how much price moved before that candle. That means before buying this candle, what you should see that how much price moved. So suppose if you see next time this kind of price action, you know that price started moving from here and already moved here, and now you are buying at the climax. So this is known as buying climax in trading. That means don't buy at the climax, try to buy at the beginning of big move. Same time here, this is known as a selling climax. That means you are trying to take a short position at the climax. So that means next time when you want to buy or sell, already ask yourself how much price moved already. Okay, if you want to buy here, see from where price started moving. If already moved this much, that means there is a high probability that you can get trapped. Same time, if you feel like taking a short position, ask yourself how much price already came down. If price already came down from here and you are selling here, that means it is likely that you are going to get trapped. Okay, so that is what I said. Solution is always check how much price moved before that big candle. Okay, now let us see a few examples. Now for example, look at this chart. This is the latest example of 25th April. Nifty opened with a big gap down and started going up, and finally it made a huge bullish candle here, right? And many option buyers must have jumped here thinking that it's a bullish sign. Look at the big bullish candle. They thought now it will keep going up, and they aggressively start buying call option. One thing you have already seen that there is a resistance here, right? There is a resistance of near the previous day high, and big candle is coming near the previous day high resistance. And if you are buying this, then you are doing a big mistake, because it is more likely a buying climax. What I said, what is the solution for that? That solution is before buying this candle, you should ask yourself how much price moved. You can see that price opened here, it made a low here, and from here it kept on moving up. So do you think that people who started buying here, they're still holding their position? When price comes near some important resistance like previous day high resistance, now they are planning to sell their position and book their profit, right? Because you know that they bought here and price already moved this much. Now they are thinking about selling their position and booking the profit, and now you are thinking about going long. So that is how you get trapped many times. Instead of what you have to do, instead of maybe taking a reversal trade better, because taking a long trade risk reward is not in your favor, because it already moved this much. Now rather than buying, maybe going for a sell position. If you see once bearish candle, near the resistance. Let us see what happened after that. If you bought that big green candle, what would have happened after that? You can see that after that sudden crash, right, from previous day high resistance. So that is why buying this kind of huge bullish candle is a big no for all option buyers. Rather than maybe taking a short position, ask yourself, where is the risk reward is in your favor? Risk reward is in your favor because sell off just started around this region. But if you buy here, already it moved this much, right? Then selling may be best option rather than buying in this candle. Same apply in the bearish side also. You can see that it started going down and then made a huge bearish candle, and it would have happened that many option buyers must have started buying put option aggressively, thinking that, oh, look at this huge bearish candle, from here market is going to go down. And let us see what happened after that. And after that you can see that it again started going up, right? So that means next time when you see this kind of price action, never buy this kind of huge bullish candle or never sell this kind of huge bearish candle, because this is known as buying climax, this is known as selling climax. Rather, maybe taking the opposite trade may be better because risk reward is in your favor. Now comes the mistake 3, that is buying or selling when price is stretched too much. That means what I mean by price is stretched too much. Especially concept is applicable at the opening of the day. Sometimes you see that market opens with a gap up with a bullish candle, or market opens with a bearish with a gap up candle. It can be medium sized candles or it can be doji or whatever the candle. But how to know that this candle is stretched too much? That means when you see this kind of gap up candle, how to know whether the price is stretched too much on the upside or lower side? For that, best thing to do is plotting the 20 EMA. When you plot the 20 EMA, you will know whether price is stretched too much. So that means before planning to go long on this candle, because it's a bullish candle, ask yourself, where is the 20 EMA? If you see that first candle formed here but 20 EMA is here, that means if you take a long trade, there is a very high probability that you may lose this trade, because chances of price coming down is higher, because 20 EMA works most of the time like a magnet. Okay, 20 EMA is like a magnet on your chart on 5 minutes time frame, where price most of the time comes and touches the 20 EMA. That means taking a long trade here not a good decision. That means same applicable on the gap down also. Sometimes you see that price opened gap down, and before taking a short position because it's a gap down and thinking that market will go down, ask yourself, where is your 20 EMA on 5 minutes time frame? You want to take an entry here, but your 20 EMA is too away from your price. That means there is a very high chances that price is going to go towards the 20 EMA. You want price to go down, but price if start going upside, what will happen? Your stop loss gets hit, right? So that means rather than taking a short position, maybe taking a long position expecting price to go towards the 20 EMA may be best trade, right? That means next time when you see this kind of bearish candle, don't take the trade just because it's a bearish sign. Rather, wait and see if it starts making some consolidation with a bullish candle. That means next time if you see a bearish candle and it is too away from 20 EMA, that means taking short position may be not a good idea. Rather, taking a long position once you see some bullish consolidation may be best trade to go long for the target of 20 EMA, because you know that 20 EMA works like a magnet most of the time, and that could be one of the best trade to go long rather than short. That means ask yourself always before taking the trade, where is the 20 EMA and where is your entry? So that is what I said. Solution is always check where is the candle and where is 20 EMA on 5 minutes time frame. Let's go to the chart and let us see couple of charts now. Now look at this chart. This is the 19th April chart, and on 19th April Nifty first candle opened with a big gap down with a bearish candle. Now before taking a short position and expecting price to go like this, ask yourself where is the 20 MA, and you can see that 20 MA is here and you are planning to take a short entry here. What I said, 20 MA works like a magnet most of the time. So that means instead of taking a short trade here, maybe long trade may be better option. Not that immediately taking a long trade on the bearish candle. That means if you see some bullish setup, then maybe taking a long trade for the target of 20 MA may be high probability trades. Let us see actually what happened on that day. And you can see that price finally touched the 20 MA. So had you taken a short trade here, then you would have got trapped, right? Rather, if you see that there is some consolidation, bullish consolidation is happening, and taking a long trade for the target of 20 MA would have given you better trade. Same here, another example happened on 23rd April in Nifty. Look at the Nifty opened with a big gap up with a bearish candle, right? We have seen earlier example also, opened with a gap down with a bearish candle. Here opened gap up with a bearish candle. Now what I said, what you should ask for before taking a long or short trade, where is your 20 MA? You see that your 20 MA is here, right? So what is the 20 MA? 20 MA works like a magnet. That means price have tendency to go towards the 20 MA most of the time. So that means taking a long position or short position, which works better? Will you take a long trade here because it opened a gap up? Now price will go up. Will you take a long trade, or will you take a short trade for the 20 MA? Best thing is to take a short trade for the target of 20 MA, right? So let us see what happened after that. 20 MA is here, price opened here. Let us replay the candlestick, and you can see that price started coming down and finally it hit the 20 MA. If you had taken a long trade here thinking that it's a gap up, bullish sign, market will go up, then you would have got trapped. But instead, had you taken a short trade thinking that it will normally go towards the 20 MA, and if you take a short trade, then maybe you would have made profit in this trade. Now let's come to the last example, that is the mistake 4. That means taking reversal trade on strong bearish day. Why I mentioned only bearish day, not a bullish day? Because you should know that market falls faster than market going up. Okay, that is why they say that market, when it is falling, it goes like a escalator, but when market has to go up, then it will go like a stairs. That means you know that when you have to climb a building by stairs, then it will take time, but when you have to come by escalator, you can come very quickly, right? So that is what meaning of market goes up like a stair and market comes down like a escalator. That means when you see some days trend is very strong on the bearish day, what many people do the mistake, that means once market is falling like this, and if they see that it is making some consolidation with a bullish pin bar, they think that, oh, market is now going to reverse because already it fell this much, how much it will fall? Now market has to go up, right? But you should know that market will not go up, go down because whatever you are thinking, market will do its own. So that means next time when you see this kind of setup, that means don't take a long trade just because it is making consolidation. And it happens to be one of my favorite setup also in option buying. That means rather than buying here, mark the low of that consolidation, and once that consolidation breaks, then you can expect a huge move on the downside. And again, what you should do, wait where it is making a consolidation. Okay, if it is making a consolidation, don't buy there, rather wait for that consolidation to break. And many times you can see that once the consolidation breaks, big move can come on the downside. So that means never be under assumption that market already fell this much, it can't fall more. It can keep falling many times, and that is what I mentioned in my solution. That is, always stay with the trend. If trend is very bearish, then better to stay with the bearish trend rather than trying to become a hero by taking a reversal trade. Follow the trend once consolidation breaks. Before that, I want to tell you that this strong bearish days you don't get very frequently, but whenever you see this kind of strong bearish day, these are one of the high opportunity for option buyers if you stay with the trend. Okay, now look at this chart. This is the 23rd January chart. Market opened a gap up and then it started making a consolidation When consolidation is happening, you don't know, right, which side market is going to go up. Market suddenly started going down. This bearish candle gave you indication that likely it's a bearish sign. So now what you will do? Will you go long here when it is making a consolidation because market is going to go up now here? No. Now stay with the trend. Wait for that low to get broken. Okay, that consolidation here, it made a consolidation. This candle you can go short once that low broken. Here you can see that again it started making a consolidation. Will you go long here because it is making a pin bar? No. Wait for that consolidation to break and go short here. And again price started coming down and here it started making a big consolidation. Now will you think that, oh, market already fell this much, how much market can fall? From here market has to go up, right? That is the thinking of many traders, because और कितना गिरेगा, इतना तो गिर चुका है, right? And people start aggressively buying here, thinking that from here market will start going up. Now being a smart trader, what you should do? You should think for a shorting opportunity, because it's a bearish price action since opening. That means market likely to go down. That doesn't mean that trying to short here just because it is making a consolidation. Patiently wait for that consolidation to break. Once the consolidation broken, you can see a big move here. Okay, because what is the psychology here? Psychology is many traders also may be thinking that, oh, market already fell this much, now market is likely to go up, and they must have taken a long trade here and they must have kept stop loss below this consolidation, and once the stop loss hit that trap, right? This is how, being an option buyer, better to stay with the trend. Then again you can see that it started making a consolidation here, right? And what you will do, you will wait for this consolidation to break and you can take a short trade here. Then again you can see that it started making a very strong consolidation here. Don't take long trade, rather take a short trade once that consolidation breaks. Here also you can see that it started making consolidation, but once consolidation breaks, it can go down. So that is how on strong bearish day you should always think about staying with the trend rather than trying to take a reversal trade. So these are the 4 mistakes which normally option buyers do, and already I discussed what is the solution for it, and that is what we discuss this kind of techniques in our new updated day trading course, that is 25 day trading strategy Nifty Bank Nifty. If you are interested, you can go below this video and you can check more details about what all I cover in my new day trading course. And so that's it guys from my side, and I'll see you soon with a new video. Until then, bye and take care.